I love the commodity markets. I have been obsessed by them for as long as I've been in the business. From day one, when I walked into the trading room for E.F. Hutton, an old American brokerage firm, to see all the cocoa samples laid out on the side of the room, and they were cutting the beans up, and they were looking at the weevil damage and the smell and all sorts of things. It has absolutely fascinated me how these commodities are a thing you can touch and feel and taste, and that is the real appeal for me, and it always has been. And granted that, you know, other products have way more volume, they're probably financially more interesting, but for me, the commodity markets have it simply because of the appeal of the product itself. And for me, the commodity markets have generally sat quite. They've had an uneasy relationship with the more mainstream financial markets. Commodities were underinvested, and they fell pretty well en masse to the lowest price levels they'd ever seen in real terms by 1999. And it's only really been the last 15 years where we've seen a resurgence in the investability of the commodity markets. And that has been a remarkable resurgence, with commodities now becoming an asset class that investors want to get involved with, that we now have pension funds involved with, that we really didn't have before. And there are a lot of evangelists out there in the pension fund world who talk about this as something that they really wanted to do. Commodities sit very differently from the bonds and the equities markets because they move in different ways. So, you know, potentially, you know, a bond correlation to a commodity market is negative. So generally, the commodity markets will move completely independently of the bond markets. That broke down a little bit in the financial crisis, but generally we're moving back to that point. You know, the exchanges do very well quite a lot of the time by trying to be innovative. They try to bring in new products. They try to bring in new things that can be traded. So generally, you can trade coffee, cocoa, you can trade softs, agricultural products, you can trade metals, you can trade energy. The most recent addition to that has been the utility market complex. So now you can trade power, gas, coal, freight, carbon, biomass. So we're beginning to see the markets start to sort of pick up the sort of innovation that Hiranda was talking about. And our business is actually to build those contracts for exchanges. So we actually go out and we build those. We've seen recently the investment banks, quite a lot of investment banks, moving away from being involved in the commodities markets on a proprietary basis. So they're no longer prepared to put their own money at risk by trading commodity markets. What's happened is we've seen a move away from the risk-taking of banks to a sort of a growing group of traders who are effectively old-style commodity merchants. These people are beginning to take up the slack where there's the trading and the getting involved in the markets is happening. But what they're doing is they're not just getting involved in the top layer of trading, they're actually starting to invest in the downstream assets. So they're actually getting involved in mining. So Glencore Xstrata, for instance, is a very good example of a real addition to a trading company's portfolio that gets them huge depth into the vertical infrastructure of the metals business. They're investing in refining, in getting involved in exploration sometimes. So they're actually finding ways in which they can take their expertise further back down the chain. That's very interesting because it changes the nature of the way that commodities are generally seen by the marketplace. From a trading perspective, yes, there's going to be gluts, there's going to be surpluses. But the likes of a Glencore, for instance, are less exposed to market price because they have a natural hedge coming right up from their mining operation all the way up to the merchanting of the ores or even the finished product. So they have much less risk by being that much more deeply embedded in the long chain of the life cycle of the product. And that as an evolution is very important because potentially takes liquidity out of the markets. Now, I'm not saying that commodities will now go back to the bad days of the sort of 1980s, 1990s, but it is quite possible that commodities will be less interesting as interest rate environments start getting more exciting, as equity environments start getting more exciting. Hiranda mentioned we're involved in an African exchange project. We're working with the East African Exchange based in Rwanda, working around the whole of the East African area, and we're building all of the products they're going to trade. Trading platforms aside and everything else. It's a very, very interesting proposition, because actually what they're trying to do is to tap into the desire for these parts of the world to start determining their own future, and that starts with price. This is a light footprint of the world taken by NASA. It's widely available in the on the web, and I use this as what I think will be the future of commodities for probably the next 50 to 100 years. The world is lit up like a Christmas tree, with one very great exception: Africa. There are currently 1 billion people in that dark continent, most of them sub-Saharan, and by 2040 there will be 1.7 billion people in that dark bit. After access to food and water, the thing that lifts people off the poverty line quickest is access to electricity. So if you want to turn the lights on, sort of anywhere, sort of Sahara downwards, or even at the top, but let's take Sahara downwards. What do you have to do? Well, clearly you have to have infrastructure that will allow the lights to be turned on. So you have to have generation. You also have to have fuel. Well, solar, yeah, fine, but doesn't necessarily work in all of the areas. Geothermal, well, yeah, middle of Africa, sits on volcanoes, makes some sense. You're not going to bring coal in unless you've got it innately there, because it costs a fortune to bring it in. So the costs of generation immediately become very high. Fuel oil is exactly the same. Potentially gas. Gas would work, and there are gas deposits being found all around, including down the central spine of Africa. And those could work. But ultimately what's going to happen, in my view, is you're going to start seeing the internalisation of resources. So the resources that are available to start generating power within sub-Saharan Africa particularly are going to start being used internally. That sort of becomes a problem when you realise that China particularly has invested a very, very large amount in buying very large tracts of land in Africa, producing crops and exporting them back to China. My fear is that the self-determination of Africa, which starts with power and with exchanges and beginning to set your own price, starts taking effect into, well, actually, now we've got power and our people are getting to have more disposable income. What are we going to do with that disposable income? Well, we'd like to buy something. Well, all of the things that have got value are being exported to China. That doesn't sit terribly well with me in terms of how things are going to flow. And knowing Africa as I do, I would expect quite a lot to then change, where there's a lot of internalisation of those types of resources. That gives China a problem, because China's economy is predicated on the availability of commodities to the masses when they want it. China then probably has no choice but to pay up whatever price they have to pay for the availability of those products. And I think my fear is that the rise in self-determination of Africa actually leads to the next really, really big commodities boom. And we're talking about a price spike, the likes of which we've never seen. Because actually, if you look at it, if the Chinese need that product, they're going to go out and they're going to buy it. So I'll leave you on that happy note. Doesn't stop my love for them. It doesn't stop the fact that I think that picture alone provides for hours of discussion and hours of interest. And I'd be very happy to chat to any of you afterwards about it or other things. Thank you.